Hey, it's Navy Dowdy here in the Chicago area in the great Midwest in the fabulous United States. You may be looking at your calendar and realizing that June is past, and although you had great intentions in March and April of getting proactive about learning how to mitigate this year's tax outcomes, the time has slipped by. People who should be storing capital differently in that stock brokerage account have already been paid 6 months in dividends that are coming to them as a 1099 next tax season. Those people that meant to move funds out of the bank are going to receive 6 months of interest now. People who see the calendar, see the date, and are already feeling remorse often say, "Oh well, too late again this year," since mentally the damage is done. This is intended to be encouragement for those taxpayers because the damage does not have to be done. Even with 6 months of time gone by, changing behavior in early July, along with a few tax tricks most tax planners know, can still allow you to mitigate most of the tax for January through June. Business owners, if you're going to do a tax analysis because your K1 last year was large, July can be a good time to look into that, as this is usually a somewhat slower time for many businesses. Perhaps not for the service industries and vacation towns, but many businesses have employees out on vacations and things are slower. What better time to finally meet with a tax planner and dig further into what being proactive actually looks like? Like many things, tax planning isn't one big idea that fixes the problem. It's a 5% tweak here, an 8% tweak there, and a 4% tweak in that other place. It's 10 little pieces that all need to be altered that add up to that 30, 40, or 50% lower tax burden. Slice up the new year this way. In July, we're going to make a list of everything that we can tweak with the tax planner. At the end of July, we're going to tweak one of those things on the list. And then in August, we'll tweak another. In October, we'll tweak one more, etc. Work on the most important thing in July so it has the longest time to positively affect the numbers. The second most thing in August. Is that all optimal? No, it would be better to stop and change everything now. But who's got the time for that? Take a slice of salami approach, and maybe you could save 40% of what you would have done if you had started in January, but you'll set yourself up for success next year. What's your takeaway here? You have lots of ways to get it done. Step 1 is caring about it. Step 2, meeting with a tax planner who can take the helm and help you make a plan of attack, educate you in small bites as you have time, and help you execute without everything else having to come to a complete stop. Time is a constant, but procrastination doesn't have to be. I'm Navy Dowdy, and remember, financial fitness can be beneficial to your wealth.